we are still connecting with the managements and talking on their quarterly results. Next up is Refex Industries. The revenue has gone up almost 76.4% year-on-year basis. The PAT is up by 122.9%. Let's talk more on this. We're joined by Dinesh Agarwal, whole-time director and CFO, Refex Industries. Dinesh, hi, good morning and welcome to the show. All right, so another strong quarter being reported, revenue up 76%, PAT is more than doubled. Tell us what went, what's the strong element of this quarter that you might want to highlight?
This quarter we have done very, very well compared to the same quarter in the previous year. This quarter, our standalone revenue is 627 crore. Compared to same period in the previous year, it was 362 crore. With a PAT of it was 33 crore in the previous year same period, and currently we have done a 74 crore of PAT. This quarter we have actually done very, very good on a standalone basis, and also on a consolidated basis. Vendor Index has recorded the revenue for the second consecutive quarter, and order execution is in full fledged. And this quarter is very, very good for us. And I mean, beginning of the Q1, I mean, that is the current financial year. Since you have done this year, we look forward, this will be a great year for Refex.
Right, Mr. Agarwal, also your EBITDA margin came in at 17% this quarter. Now, last time you had mentioned the sustainable range would be about 15 to 18%, though Q4 touched about 20%. Now, where do you see the margin settling over in FY27?
Will be between the 15 to 18% in the current financial year EBITDA margin, and this has gone down by 1% specific to because one-time expenses. There is a changeover of bank we have done. We have taken a new sanction from Indian Overseas Bank and closed the HDFC Bank, and then because of that there is a 4 crore rupees of expenses has been booked towards the processing charges, takeover and other thing. And this year also margin will maintain the same as per the guidance. We'll have 15 to 18% of margin will be maintaining this current financial year.
Right. The ash and coal order book stands at 1635 crore versus roughly 1,500 crores last quarter. Now, even with 279 crores of fresh wins, what's the update here?
Order execution is in full fledged. We are winning every day new order. We have won last week also few more order. Few order we have won. We are waiting for the LOA, which will be announced in the few weeks' time. So we are winning. We have understood the strategy of the pricing and also the executions, and we are hitting almost every tender. We are winning it, and we are expected to our order book to increase further. As of now, it is 1,635. Out of that, 90% will execute in the current financial year itself, and we'll be winning few more tender in the current financial year.
All right, now onto your ash volumes that are ramping up. Last quarter, you said you were confident to achieve about 90 to 95,000 TPD in the current financial year. So what's that looking like?
We are on track to meet the target. Q2 always due to monsoon will be slow, whereas from Q3 onward will be ramping up. We are also adding few more line of business into the same ash segment, doing a downstreaming of the ash utilizations, and our number will increase only from the Q3 of this financial year. Q2 always, like due to monsoon, will be little slow, whereas Q3, Q4 will be doing very good this financial year.
Right. You had also spoken about sharpening the company's focus on the higher margin coal and ash handling business while exiting lower margin businesses like power trading and refrigerants. After Q1, are you seeing this strategic shift play out?
Yeah, this exercise we started somewhere 9 months back, where we started focusing only on high margin business and the high potentials business. Because of that, we have exited power trading business and also the refrigerant gas manufacturing and trading business. And our complete 95 to 97% of the complete business is from the coal and ash handling segment. and the related to the coal and ice handling business. Our focus is only on the coal and ice handling and how to win the long-term contract. That is how only our focus. And you can see in the result of Q4 and also the Q1, going forward, all margin will be better only. I mean, it is between the 15 to 18% EBITDA margin, and business order is in hand, good order in hand, both in the wind and the coal and ice segment. And both the order, 90% of the order book will be executing in the current financial year. And this year will be a great year for the Refex. And we are on track to on our momentum, which we started 9 months back, and we are on track.
All right, now let's take a look at your wind business. Now that Q1 is behind us, can you update us on execution against your order book and whether you're still confident of achieving your FY27 wind revenue guidance?
We had an order book of 1,860. In that, close to 500 crore to 525 crore has already been executed, and the balance will get executed in the current financial year. We are in the advanced stage to close few more orders. We expect next 30 days to 45 days to close 2 more orders and allowance into the market. And we are, I mean, on track. I mean, in the business for the wind also. Execution is in full swing. Already few dispatches has happened. It is on transit, and that there also revenue booking will happen in the Q3. And wind segment is also going to do very good for Refex in the current financial year.
But what segments do you see driving growth for your business in entire FY27 now?
Both the business, coal and ice handling business will completely dominate the numbers, whereas wind also will be touching this financial year close to 2,000 crore revenue. And we are confident to achieve both the cases will be, I mean, crossing last year's number. Previous financial year will be having a very good number this year. Both wind and the coal and ice handling business. And the demerger also will happen in this financial year of the Refex Mobility Limited. This both wind and the coal and ice handling business will be dominating this financial year.
Now, previously, you guided for profit growth to outpace revenue growth, now over 25% PAT growth. Are you still on track to achieve this?
Yes. We are confident to deliver 25% of PAT growth this financial year.
All right. I think with that, we are up on the time. Thank you so much for talking to us today and answering all the questions.